All right. All right, so we'll be discussing the 2022 A-level accounting MCQ paper. So you all know always the first question will be like they'll be asking like what is accounting? So or else about financial or management accounting, as we all done many questions. Look at the first question, it's very easy. Which of the following statement best describe the primary? So when they use the word best describes the primary purpose means guys, okay, there can be more than one purpose. I mean, more than one proper answer, but you all have to go for the best answer there. So always it is about providing information for stakeholders for decision making. So when it comes to like financial accounting, you all know that the decision information is provided to all stakeholders, or we call external stakeholders. So when external stakeholders are able to have the decision, internal also can have that information. So first one is just, it's not the best answer because like it is one, like you can know, like you can use financial accounting for that purpose for legal requirements, right? Records transaction for each period, okay, converts transaction into financial information, provides information for the manager. No, the primary purpose is what, provide information to the external stakeholder. So you can say fifth one is the answer, right? So when it comes to concepts, you all know we had learned all the concepts. It always comes from MCQs. You should know the meaning. Memorizing the definition will not help you, as you all know, right? So which of the following accounting concepts leads to the non-recognition of air pollution? Now, air pollution, guys, we can't measure in monetary terms. So you can't record that in accounting. So it's going to be money measurement concept. Question number 3, guys, okay, right? So here the answer is number 2. Question number 3. Which of the following accounting concepts provide the basis for making an allowance for doubtful debt? So allowance for doubtful debt, you all know, guys, it comes out of prudence concept. Now, as I said, like safety measure, and we are recording it as an expense. So matching. So what is the answer, guys? Prudence and matching. Matching, is there an answer? Yes, matching and prudence. We can stick with third answer. And when you check question number 4 and 5, which is connected. So question number 4, guys, okay. They're asking about the prime entry books, which is very easy. You all know there are 8 prime entry books, 7 specific and 1 general journal. Why we call specific? Because we can only record specific type of transactions. So question number 4 says, when you read this question, which is the following prime entry books are used to record the purchase of motor vehicles. So always when you read something like this, guys, purchase of motor vehicles, guys, that means there is more than one vehicle purchased, and the sale of motor vehicle. Only one motor vehicle is being sold. Mihirani PLC is a motor vehicle trading company. So, guys, okay, motor vehicle is going to be the stock of Mihirani. Don't forget that. If I just normally say motor vehicle, it's fixed asset, but you know what is the definition of stock? No, items which are held for sale. No, guys, okay, the finished goods items which are held for sale in the ordinary course of business. So, for Mihirani, guys, okay, the motor vehicle that they sell are known as stock, right? Okay. The company purchased motor vehicles for 10 million on credit, and out of this, a motor vehicle costing 2 million was for office work. So one motor vehicle is used for like, okay, business purpose, which is mean by what, guys? Okay, fixed asset. Other motor vehicles 8 million worth is stocks, guys. Okay, so when you buy stocks for credit, purchase journal. When you buy fixed assets for credit, it's general journal. And the sale of motor vehicle, guys, okay, look, a motor vehicle costing 3 not sold for 4 million on cash. So you're receiving cash zip journal. Answer is fifth one. Okay, answer is fifth one, right? Okay. All right. So let us see what is the question. What is question number 5? As I took for this page, guys. Okay. Which of the following accounting nation affects the net effect of all transaction as at 31st March 2020? It's very simple, guys. Okay. Non-current asset, liability, and equity. So stock is current asset, fixed asset is non-current asset, right? Okay. So you all know very well, guys. Okay. Mihirani PLC is a motor vehicle trading company. Company purchased motor vehicle for 10 million, but entire motor vehicle you can't record in non-current asset because, guys, 2 million means what, guys? Okay, fixed asset. So non-current asset 2 million, and stocks, guys, okay, 8 million, and you have to pay 10 million, right? Okay. And it's not over, then what happened, guys? Okay. Depreciation of this vehicle for the year ending, guys. Okay. Depreciation was 100,000, guys. Okay. So when depreciation is like 100,000, what you should do, guys? Okay. You have to minus from equity 100 by expense increase minus, and provision for depreciation will reduce the value of asset, right? 100. And then they are saying 2 million worth of 3 million worth of like motor vehicle was sold for 4 million on cash. So 3 million current asset, no, 3 million current asset decrease, and it was sold for cash. Cash increased by 4 million. Therefore, you have what, guys? Okay, you have a profit of like, okay, 1 million there. So, guys, final answer, guys, I'm going to find out here. Here it should be 900 plus, no? Here it should be 900 plus. Here it should be like 10,000, right? Everything is 10,000. Here it should be 8 minus 3, right? 8 minus 3, guys. Okay, it's going to be 5, 5 plus 4, 9,000. So we have three answers here. 900 only we have one answer. So we are going to stick with answer number 2 because this is also 1,900, answer number 2. So we answered 5 MCQs, easy 20 marks. Okay. So guys, okay, right, question number 6, 7 is connected. Amal Limited, which is registered for value-added tax, sold goods for rupees 672,000 on credit to Sunimal traders on 15/3/2022. This invoice value includes 12% VAT. Sunimal traders return goods with an invoice value of 84,000 due to defects. Sunimal traders issued a check on 31st March 2022 to settle the full amount due to Amal Limited, right? Okay. So right now, guys, okay, you all know that, guys, normally there is something called list price, no? There's something called list price. From this, you have to minus trade discount. This is not there in the question, but still I'm explaining you all here. It's supposed to get. So from the trade discount, if you minus, guys, okay, you get the relevant sales or the relevant purchase price, right? Okay. And for this only, guys, okay, normally the VAT is being added. And this is the amount that should be received from the creditors if it is a received from the debtors if it is a credit sale, or paid to the creditors if it is a credit purchase, or that is the amount received as cash if it is a cash sale, or paid as cash if it is a cash purchase, right? Okay. Okay. Okay, okay. So therefore, guys, okay, you know the meaning of like list price, they haven't mentioned in this, so not given, not given. And they have given, guys, okay, 672,000 is invoice. Now, when we say the word invoice price, guys, okay, here, the invoice price means what, it is the price that we are going to charge from the customer, guys. Okay, why? Sales invoice. What is sales invoice? The source document for credit sales, okay? So inclusive VAT, if it is 672,000, guys, VAT is 12% of this, no? Which means I have taught you all this method, sales plus VAT is equal to 672,000 means this 672,000 is 112%. VAT is 12% out of sale. So out of sale means out of 100, no? So the working, how you can do this, you can use a calculator easily. If 672,000 is 112 means how much is 12% if you calculate, that will be 72,000 in rupees, guys. So if this is 72,000, common sense will say this is equal to 600,000, right? And then, guys, okay, there's a return of 84,000, right? But in the question, if you notice, guys, they're not asking about the return or anything. Question number 6 says the source document used to record all of the above mentioned transaction. Number 1 is selling goods or credit, guys. Okay, so invoice you have 1, 2, 3, 4. Then we have, guys, okay, like a return. So I have said sales. So what is it? Credit note. So we have these. So these are out, guys. Okay. And then we are receiving cash now, guys. Okay. So receipt. So answer is number 2. 7. The correct double entry to record the goods sold on 15/3 in the books of Amal. On 15/3 only the say. That means without the return. Why? They're asking the sales. No. So you all know here. Your sales income 600. VAT payable to the government 72. Amount receivable from the debtor is 672, guys. Debtors control account 672, correct. 600 is sales and 72 is what? Answer is number 4. Likewise, guys, if you check question number 8 and 9 is connected, right? So the trial balance of like Rama traders as at 31st March 2022 did not balance, and the difference was credited to a suspense account. So they had credited the difference to suspense account, right? That means the trial balance credit column was less than the debit column, right? Subsequent investigation revealed the following errors. Look, question number 8, what are they asking, guys? Okay. Which of the above errors have led to balance led to the balance means what are the errors which are revealed through trial balance? If not, they are asking like which errors has created a suspense amount. So why will suspense be created? Only when there is a situation where for a debit, there is no same amount of credit. That means double entry, even though accounts are wrong, no problem. There is no double entry being done. Then that's why, guys, okay, questions might be like, I mean, like double entry might be. That's why, guys, okay, questions be like, okay, if you want to find out amount of suspense, you have to find out how much was the difference due to those such errors. But first one is a theory question. Which of the following errors have led to the balance in the suspense account, guys? Okay. So look, rupees 100,000 paid for electricity has been correctly recorded in the cash account. So cash account 100 is correct, not posted to electricity, guys. So double entry is not there. A is an answer, guys. Okay. So this can't be an answer. This can't be an answer because A is there in 1, 3, and 5. Total of the discount allowed column of the cash receipt journal, rupees 30,000. The total of the discount column of the cash receipt journal, rupees 30,000 has been recognized as bad debt. So guys, okay, look guys, the total of the discount on the cash receipt journal, rupees 30,000. So guys, discount allowed is also what, guys? Okay, discount allowed is also an expense. Yes or no? Bad debt is also an expense, no? So discount allowed is an expense, bad debt. So will it create a like a problem in the double? Even though the accounting is wrong, here they are not asking whether it is an error. These are all errors, guys. These are all errors. They are asking the errors which are revealed through what, guys? Okay, errors which are revealed through trial balance with Rahani, right? Okay, they asked only that, right? So if you check, guys, okay, B will not be an answer. Why? Discount allowed is expense, bad debt is also expense. So P in it nathang. Here, look, guys, I can take this out. So it's all depend. I don't want even read C. I'm doing an MCQ. I don't want read C. Why, guys? C, they came at no, it's there in both. So D, total cash received from debtors, rupees 150 during the month of March has been correctly posted to cash account, but error as to debit. It's okay for a credit. They have done a debit. No, has been correctly posted to the cash account. So cash account debit, again debited. 2 times debit means double entry wrong. So answer is third one, ACD. Let us go for question number 9. What are they asking, guys? Okay. The decrease in the net profit for the year ending after correcting the above errors and the balance of the suspense account before correcting. Right. Good question. Here, look, guys. Okay. So let's find out the suspense created. Now you all know AC and create suspense. What normal students do, I mean, like other class, they will prepare the suspense account and find out the difference, which is the answer. Let's do like this. 100 paid for electricity, correctly recorded in the cash account credit. Electricity, you did not record debit, no? So that will create a suspense of how much? 100,000 debit side. Which side is less because of that error? That side only suspense created. Then C, guys. So why don't you read B? B is not creating suspense, no? Total of the purchase journal 800 has been correctly recorded in the purchase account, but it has been credited to the creditors control account 80. So 720,000 in the credit side, suspense is less, right? I hope you all understand, right? So 720,000 in the credit side, suspense is less. Finally, D, total cash received from debtors 150 during the month has been correctly posted to the cash account. But again, error is so 2 times if you debit 150, guys, okay, 400,000 credit. So if you check, guys, credit 1 million 120, here it's 100 means it's going to be 1,020,000. Suspense should be suspense credit balance is being created. Let's check. Do we have an answer? No, I made a mistake. 150 and 150, guys, okay. 150 and 150 is how much, guys? It is equal to 300,000. So 300,000 means 920. So 920 credit, 1,020 credit. So it's going to be 920 credit. Let's check. Do we have an answer? 920 credit. Yes, we have 2 answers, guys. Okay. Then next question, what are they asking, guys? Okay. They're asking like what is the profit impact on profit, guys, once this has been like corrected. So now look, guys, okay, I will check, is there any like correction that should be done which correction that should be done, which has impacted the profit. So question number 8, if you check, guys, answer is number 3, because why, guys? They are asking like, okay, what are the things that would, what are the errors that would have created a suspense, right? Okay, so next one, guys. Okay, question number 9, we are understood, we like calculated 920, 920, but there are two options now. So the question is decrease in the net profit, guys. So let me go and find out the expenses or not recording of income here. 100 paid for electricity, correctly record in cash account. You did not record. So guys, because you did not record an expense, so not recorded expense, what will happen? Your profit should decrease, not has, I'm saying. Your profit has increased. They're asking what will happen to the profit. This is what should happen, right? What should happen, right? Okay. Next one, B. Total discount allowed receipt journal has been, so expense is recorded as expense. So I'll write the amount also here, 100,000. Next one, total of purchase 800, correctly recorded in the purchase in expense, correctly recorded, but a mistake is in the creditors control account, it is not impacting the profit. The total cash receipt from debtors 150 during the month has been correctly posted to the cash account debit, but erroneously debited to the creditors. So creditors control one's liability, debtors, indirectly it could be affected due to provision or something. Here they haven't mentioned. So no effect, profit decreased by 100,000. Answer is going to be number 2, guys. Is it clear? I hope you all understood, right? Okay. But going back to question number, now going for question number 10, guys. Dilruksh now is a sole proprietor, has donated 58,000 stocks during the year ending. However, no adjustment had been made in the books of accounts as to this donation. No adjustment been made. In the preparation of financial statement, guys, closing inventory had been correctly ascertained based on physical stock. Okay. So, guys, what is the meaning of like physical stock? Means they have counted. So that means the closing stock is not wrong, guys, right? They have counted the physical stock and written. The impact on the gross profit and the net profit of the business. So look, guys, gross profit and the net profit, the impact they're asking. Very simple, guys. Listen, gross profit and the net profit. Here, look, they haven't recorded, no. Students, if you donate the stocks, it is not available for sale, no. So if they should have minus from cost of stock available for sale or from purchase, but they did not minus, so their cost of sale is overstated. Yes or no? So now if I correct it and reduce the cost of sale, my gross profit should increase by 58,000. My gross profit should increase by 58,000. Net profit, guys, what do you obviously how many answers are there? Here, right? Okay. So some of you all might think, guys, you all can't go for the answers decreased now. If gross profit increase, net profit should increase. Some people say, so I don't think there is an answer here. It should be increased. No, students, they did not record double entry, no, so they did not record donation as expense. So they are understood. They did not like increase the gross profit. Here they did not record an expense. So what has happened? It has cancelled out. So no impact on net profit. Answer is number 1, guys. Okay, so 10th one, question number 1 is the answer, right? Okay. Next, let us go for question number 11, which is related to like manufacturing account, right? Question number 11 is related to manufacturing account. In that, they have given, guys, the following information has been extracted from the accounting records of Anuradha Apparel Manufacturing Company. So this is very simple here, right? Very simple. They're asking the raw material, closing inventory, and total manufacturing cost, right? So let's then see what is the raw material inventory at closing date and the total manufacturing cost. So I'm going to say raw material, use your calculator. Raw material opening 2,000, purchase 29. We should have 31,000. And we have consumed 26,000, guys. Okay, so how? Very simple. If you consume 26, 5,000 is the closing raw material. This is the direct material used. 26,000. Next one, guys, wages 42,000, direct labors. Building rent 20,000 given. Machine depreciation, non-production overhead 6,000. Building rent, you all see, it is used for both administrative and factory. Factory has 80%, so we can't write the entire 20. What is 80%? 16,000 only. That's a very simple question, guys. 42, 42, 60, 68, 68, and 22 is going to give me 68 and 20 is going to be 90,000. So I'm going to find out the answer 90,000 and the closing raw material 5,000. Answer is going to be fourth one. So simply we have completed 11. This one, guys, easy 44 marks, right? Okay. All right, guys. So next one, the question is from what incomplete record baggage of training, right? Okay. Mahindra Trade as a sole proprietor does not maintain as incorrect records properly. Some of the assets and liability of the firm as at 31st March 2022 and 1st March. So it's 1 month, guys. Okay. 1 month, not 1 year. Inventory at cost, guys. The question what are they asking is the purchase and sales, guys. Okay. Right. Let's see. So they have given trade debtors, trade creditors. During the month, the firm had collected 50,000 from, very simple, guys, okay. So you can do using a ledger account or else you can prepare what, guys, okay, mathematical format again. So you look, guys, debtors, creditors. So trade debtors, guys, opening 60, closing 75. Asset. Here, look, I don't want to write the description. All you all know what I'm writing. Opening 60. So closing, we have 75, brought down and carried down balances, right? Trade creditors opening 5,000, liability, that's why credit side, closing is equal to 15, brought down and carried down. During the month end, 31st, firm had collected 50 from trade debtors. So cash credit, debtors, 50. Less in a, guys, paid 25, creditors debit, why cash credit, right? Okay, the firm sells goods keeping a profit of 25% on selling price, not on cost, on selling price. All purchase and sales are made on credit basis, guys. Okay, so firm sells goods now, guys. Okay, so we have to find out the sales here. So let's find out the purchase first here. Hello, 40, 40, 35,000 is purchase, guys. So we have the purchase. Here we have 35, 35, right? And here if you find out 50 plus 75 is equal to 125, 125. So we can find out like 65, guys. Look how easy answer. Answer is number 5. You might think, so then why did they give the margin and all? The cost of inventory. So let's see, guys. Opening stock was 80. Opening stock was 83,000. We had purchased 35,000. So what do we call? Cost of goods available for sale is 118,000. Understood now, guys? Then now you have to find out the closing stock. So what was your sales, guys? Okay, your sale was 65. No, sales was 65. How? Cost plus profit. So your profit was 25% of selling price. 25% of selling price. From 65, what is like 25%? If you calculate 1/4, I have to divide this into 4 parts, which is equal to 15. Okay, then guys, 16.25. 16.25, sir. Then the cost is equal to how much? 65 minus 16.25. Let me use calculator. So let me check whether it is 16.25. How? 65. I'm going to divide that by 4. Yes, correct. 16.25. So cost is going to be 48.75, which means 48,750 is the cost of sale. That means how much is remaining? I have to minus from 118, the 48,750. So it is equal to, guys, okay? I have to minus 118 again. I have to minus how much, guys? Okay. Minus 48.75. 69.25. Answer is number 3, guys. Look, I hope you all understood until question number 30. Right? Okay. Very simple. Question number 14, guys. Non-profit organization Tisara Welfare Association was established on 1/1/2020 to provide scholarships to university students. The details of the receipts and payments account. Okay, what is it? You're receiving and paying cash for the year ending are as follows. However, this does not include the payment for scholarship for the year. So that it excludes one thing, right? Not include means excludes, no, right? So look, guys, what are they saying? The requirement is find the surplus deficit and the cash balance. Surplus deficit difference between income and expense, right? Okay. So guys, I'll just prepare here the Receipts and payments, receipt I will add, payment. This is working MCQ, no, you don't want to prepare like part 2, right? Okay, so I'll see here, guys. Okay, man. Look at this. The opening balance is given 1,500. Donation receipts 2,000, right? So, guys, here I'm going to prepare income and expenses. Income means I will add, expense or minus. So here donation received during the year, I'm going to check whether it's a special or general donation. Donations are recognized in the year of receipt. So I'm going to record as income also. No one might think, why don't you record the 1,500 income? It is the opening balance, right? Okay, of cash. Interest received for the year is 180 received cash, but I'll check how much is the relevant interest for the year. Go and check that. Are they saying anything about that relevant interest? No. So therefore, it is income 180. Payment for the scholarship that were in arrears in year 2020 for 10 students, 20 guys. Okay. Right, guys. So we are paying right now 20. So guys, I'm going to minus, but here I won't record it as an expense because we are paying a previous year expense. Every student is given an annual scholarship of 24,000 and it is paid as rupees 2,000 per month, right? Okay. The total number of students selected for the scholarship in the year 2021 was 90, of which 75 students were paid for the whole year and the remaining students were paid only for 10 months. The arrears was paid in 2022. This is year 2021, no, guys. Okay. Right. So the total number of students selected for the scholarship was 90. Of that, 75 students were paid. No. So how much, guys, for the whole year, guys? So whole year kila kiya ne, how much, guys? Okay, 75 multiplied by 24,000. Is it clear? Right? Okay, we are doing without the 3 zeros. No. So 75 multiplied by 24 ki dene, 75 multiplied by 24,800 paid. And guys, okay, 10 students for what remaining, how many students, guys? Okay, remaining, yeah, remaining is 15 students. We paid not for 12 months, only for 10 months. So it is only 20, which is equal to 300. Right? The arrears were paid later. So whether we pay or we don't pay, guys, what is the expense for this year, guys? 90 students, scholarship. How much, guys? You get 24,000. So if I add that, guys, 90 multiplied by 24, 90 multiplied by 24, I have 2,160, guys. 2,160 as expense, right? So now let us see, guys, okay, do we have an answer after recording the given information, right? So you have to just use the calculator, right? Right, question number 14, guys, okay, question number 14. You can see here directly there is a profit of how much? 20. So there are only two answers. Then balance of receipts and payments account 2,000, 3,000. So 3,005 plus 180 is 3,680. I have to minus from 3,680. I have to minus 2,120. I'll end up getting then 1,560. Exactly, I have the answer number 3. Very good question, guys. MCQ number 14, answer is number 3, guys. MCQ number 14, answer is number 3, right? So 15th one, guys, okay. 15th one. Which of the following statements are correct in relation to the financial statement of partnership? Theory, guys, okay. Profit of partnership can be appropriate interest on capital, salaries, and the profit share of partners. Partnership profit is net profit, guys, okay. Partners profit is equal, partners profit is only appropriation profit. So A is a correct statement. Statement of cash flows cannot, why cannot be prepared? It's like this, it can be prepared. B is wrong. I'm going to take out, guys. I have these two left. D is correct. Don't need to read why both answers as. The goods drawing of the partner should be adjusted when appropriating profit of the partnership. Goods drawing of the partner should be adjusted when appropriating profit, guys. Okay, so when appropriate profit, do we adjust goods drawings? No, guys, we don't. We record it in current account. We directly minus from the equity, guys. So the 15th one, guys, okay, we can stick with answer number 2, A and D. And D, I didn't even read, guys. Why? No need, don't need to waste time there, right? Okay. Why only the answer options left? We have D, right? I'll just see the interest on loan givens. Recognized expense, obviously, right? Okay, interest on loan 5%. If in the agreement, if says whatever the percentage, ordinance according to the partnership ordinance number 24 of 1890, that will be 5% interest per annum. Again, a theory, guys. Okay. Question number 16. Which of the following statements are correct as to the benefits entitled by the partners of a partnership? When a partner is retiring, okay, she will get a benefit arising from the unrecorded assets of the partnership in proportion to the profit share, guys. Okay. So question number 16 below, guys. Okay. Whether is it correct or not, guys? Very simple. Unrecorded assets, and on that day they revalue or sometimes the goodwill, guys. He's getting according to the profit share. Now, revaluation profit is shared based on profit share. So A, we can say it is a correct answer. Let's see about B. Interest could be given to loan partner only if it is stated in the no. According to ordinance, you have to pay 5%. B is wrong. Take out B out. So A is correct now, guys. Then this is also wrong. Guys, I have only one answer left. A, C, I didn't even read C, I didn't even read D, guys. Answer is number 4. You all understood, guys? Okay. Right. Next one, guys. We are on to question number 17. Again, guys, okay, theory. Which of the following statements are correct as per LKS on presentation of financial statement, right? An entity should prepare all its financial statements using accrual. Wrong, no, guys. Cash flow statement, we never use what, guys? Okay. Accrual basis. So 17, guys, A is not correct. No, so guys, okay. We can take off all A answers out. Just a minute. Right, question number 17, we can take all A answers out, right? So A answers, A out. So we have a doubt in this. An entity should not offset asset and liabilities when preparing financial statements. They're asking, is that correct? An entity should not, okay, we'll go for an entity should not offset, should not asset and liabilities when preparing financial statements unless permitted by another standard. Right? Normally, guys, when you're preparing asset and asset liability, if a standard does not say, guys, we cannot do that, right? Okay. Sometimes if you have a doubt, guys, okay, see, and an entity should present with equal prominence all of the financial statement in a complete set of should present with equal prominence all of the financial statement in a complete set of years. Always it should be completely changed. So 17th, okay, you can go with the C answer means, and you all know that, guys, you will have a doubt. Third one or fifth one. Question number 17, third one or fifth one, guys. So here, unless otherwise the another standard permits, guys, okay, we don't go and offset. So you can stay with the answer number 5. Again, here we have a question, guys. Question number 18. This is related to what, guys? LKS2 inventories, right? Okay. LKS2. Question number 18, guys. Okay, it is all about what? They're asking LKS2. Okay, like any inventories, no, guys. Very easy. They are saying, guys, raw material purchase 1680. What is the question? It's the cost of this stock of shirts as at 30th. Cost of the stock of shirts as at 31st March 2022 as per LKS. So you all know, guys, okay, purchase cost, other cost, conversion cost, we have to add. You all know what to add, what not to consider. Raw material purchase, consider, add. Carriage inward, add, guys. So 2,280,000 is cost of raw material available to purchase. Right, okay. Open stock, they haven't given you guys information. Right, okay. Cost of raw material destroyed, guys, 380 destroyed. So you should have 1,900,000 worth of raw material. Direct labor, yes, you have to add. It comes under prime cost. Manufacturing overhead, yes. So the total cost is going to be, guys, okay, 4,000. And also they are saying storage cost incurred for these shirts for 250. Guys, that is not recorded in manufacturing account. No, that is recorded via in trading account. No, right? Because you are storing the finished goods, no, guys, okay, not the raw material. You might think, so I can remember you gave that add to, we should add the storage cost, loading, unloading. If you are storing the raw material, you have to add to the purchase. Yes, here you are storing the finished goods. No, then where should we record? When you're preparing the trading account, you have to write opening stock plus manufactured plus storage cost. Okay, it will increase the cost of finished goods, right? Okay, I mean, it will increase the cost of manufactured good, but I mean, when you're going to find the cost of sale, but not at the initial. This one here, answer is number 2, guys. Question number 19, guys. Which of the following should be classified as cash flows arising from investing? Easy, guys. Investing activity. So, under fixed asset sambandha. I taught you all very clearly. If you issue shares, it comes under finance. But if you purchase or sell shares, it comes under invest. So, cash paid to purchase ordinary share of other companies, you are investing there, guys. Okay. A is an answer, guys. Okay. So, this is out. Can. Cash paid to purchase treasury bills with 1 year maturity period, guys. Okay. You all know that B 1 year, it is cash equivalent, won't come. So B won't come, B won't come. Cash paid to settle the lease liability related to, guys, cash paid to settle the lease liability related to right of use assets, guys. Okay. The right of use assets, right? Okay. So why I have taken this? Just a minute. මෙතන උත්තරේ නෑනේ guys. Okay, C එන්න බෑ. එතකොට then I have made a mistake here. බලමු. Cash pay to purchase. Okay. Cash pay to purchase with 1 year maturity period. Okay. So cash pay to purchase treasury bills with 1 year. Then guys, A can be the answer as well as A and B. The cash pay to settle these liabilities related to right use of assets, guys. C won't come, guys. C is actually you are settling a loan, no, guys. Okay. So take C out, not B out, guys. Okay. Take C out. So A and B or A only, guys. Okay. 19th one of the underful, guys. Another A and B or A only. A only get වැරදි නෑ, guys, because treasury bill is cash equivalent, but 1 year maturity හරියට අවුරුදු නිසා can still stay with third one, no problem. One එකත් exam වෙන බලයි හරිද, guys? අවුලක් නැහැ. ඒ එකත් හරි. Question number 20, guys. As per LKS like 8, which is accounting policy changes in accounting estimates and errors. What is the question, guys? Okay. Correct. Right, correct. The change of depreciation method of machinery from straight line method to reducing balance method is considered change in accounting estimate. Yes, no, guys? Because 10%, 5%, those are now to provision, all those comes in estimation. So A is correct. The change of the cost formula using inventory valuation from first in, first out to WACC method is considered change in accounting. Ekat policy, the company uses 5-4 policy WACC policy ekat hari. Prior period material errors are corrected in the financial statement retrospectively unless it's impracticable to do so. Right? Okay. Again, prior period material errors, guys. Okay. Any previous errors is what, guys, corrected in the financial statement retrospectively. Right? Okay. So answer is going to be all correct. All A, B, C. Pahamadan, guys. Okay. All correct. Yeah. Right. Okay. Right, question number 21, guys. Okay, SLFRS 16 leasing. Uday PLC entered in leases. So I have taught you all methods how to do this in part 2 without preparing ledger accounts. Easy table method. Uday PLC entered onto a lease agreement on 31st March 2020 to obtain the right of use of motor vehicle for a period of 5 years. So it's a 5-year, no, guys. You look, I'll say year 0, year 1, year 2, year 3, year 4, and year 5. A down payment. So year 0 is for a down payment, no, guys. Okay, so 3,000 is down payment according to the lease. So I'll go with the full amount because there is a decimal in the window. So how much, guys? Okay, right? Yeah, 3 million down payment, guys. And what else they are saying here, guys? Okay, on this day, according to lease agreement, 5 annual lease 10555190. So this was the down payment actually, right? This was the down payment actually. And then guys, okay, you have to pay, I'll write the loan amount here and the interest here with the installment is equal to 10555190 ne? So every year you have to pay 1055. So this is installment, right? 1055 190 1055. So 1055 190 along with guys this 3 million is going to be the full value of the fixed asset. Harida Bharati interest including only that is 1055. Okay. So if I take this total only, I'll get the value of that relevant. What are they buying, guys? Motor vehicle. So guys, should be paid over the lease term, and the first installment is due on 31st March 2023, guys. Okay, so we are in, guys, the first year, guys. How do I know it's first year? Because, guys, okay, our are not even in year one, guys. Okay, we are in like okay year zero. Reason is being why, guys. Look, no, guys. Up year one ne kitna hai, guys? Because look, we are on the last date of our year. They are asking the current liability on the last date, guys. So next year, just find what is the interest given, guys. So they are saying, guys, the interest related to this lease agreement is 1275950, guys. Okay, total interest. So they have given the total interest is equal to how much? 1275950. They are talking about the total interest, right? Okay, and they are saying the implicit interest rate of this lease is 10% per annum, guys. Okay, so look, so they are not going to give you how much is the interest and all those things. Question is the lease liability presented as a current liability, right? Now, guys, take this total so that if you minus this 1275, you can find out this. Is it clear? So, equipment account 1055 190 1055 190 multiplied by 5, you will get 5275 5275 950. From that, I want you all to minus 1275 950. You will exactly get here how much, guys? 4 million. So this is the total 4 million you are going to pay from year 1 to year 3, the loan, guys. Okay, the value of the vehicle is 7 million. Why, guys? 4 plus 3 down payment. So 4 million, guys, is going to be your loan that you have applied for, right? Okay. Next, they are saying, what is the lease liability? No. So first year interest is 400,000. Why? It's 10%. So this is your answer. Next year, you have to pay this, no, guys. So 1055 190 minus 400 will give me 655 190. Answer is number 2. So I hope you all understood that lease. Very good adjustment. I hope you all understood, right? Question number 22, guys, company accounts. In this also, we are done plenty. You know, if you take the, we are with 80 papers, like guys, okay, chapter. So I'll see here, total income and total expense. You know what is total income, total expense. Just the students who knows part 2 is unable to answer such questions. So we had done. Let's see. They're asking the profit and the comprehensive income. When they talk about the profit, guys, they're asking the net profit because it's the profit for the year after tax, right? Okay. Total income and total expenses. Sorry. At question number 22, right? Total income and total expenses recognized for the year ending 31st March 2000. Just a minute, guys. Right, okay. 31st March 2022 of Suranga PLC were 5,000. Total income 5,000, guys. So total income, I'll write here 5,000. Total expenses 3,500. So the difference is what you know, total comprehensive income, guys, 1,500. What is total comprehensive income, you know, guys? This is the profit plus other comprehensive income. So if I add these two, it should be equal to 1500. Look, guys, answer can be this, answer can be this, answer can be this, answer can't be this, answer can't be this. That is common sense. Do you all agree? Hey, they can make it 1500, don't you guys? But you can't go for a tactic to answer because there are three possibilities. Next one. Surplus result, okay, the total income recognized includes the following. Surplus result of the first time revaluation of land, guys, okay. Other comprehensive income, 800 anivaring. Gain on sale of machine, 200, guys, okay. Gain on sale of machine, profit take a category, other income, right? Gain on sale is other income, right? Total expenses recognized includes a revaluation deficit of 300 resulted on the first time. So 300 first time is not other comprehensive income. It comes under other expense again, now 300. Is it clear? So guys, then other comprehensive income, we have, guys, okay, here the 800,000. So therefore answer is going to be number one, guys. Very simple. Question number 20. Tax adjustment also I have taught you all what is meant by tax paid, what is quarter one, quarter two, quarter three, quarter self-assessment tax paid, right? Let's see. The total income tax paid during the current year includes the following. Income tax paid based on self-assessment. Look, first three, a student who is just like following method without knowing these words meaning, they will struggle. You all know what is that quarter one, quarter two, quarter three, why always there is a provision, what is under and over provision, we had done perfectly, right? Now your juniors also just started. Guess maybe see revision karani guys. They are also like, there are specific students, like you all only guys. Now, all these questions should be nothing, I mean, for you all because you have done plenty of questions, right? So total income tax paid during the current year includes the following. Income tax paid based on self-assessment for the first three quarters, we paid 2750. 2750 is the tax paid for the current year. Payment of income, that means last year we paid 900, guys, okay. Already that's the tax paid there. They're asking how much the tax expense recognized. Now, in simple terms, you have to prepare that note number 3, income tax note. So then next one they are saying income tax for the current year you haven't paid 1,002. So for the current year, guys, you paid 2750 and payable for the current year. So this is going to be our year, this year. This is last year you had paid this year. So payable during this year is going to be, they are giving 1,200. Right, guys? Then you might think, so then it is equal to 3,950, or we have an answer. No, this is the amount without adjusting for provision. Last year provision is 800, but this year they had to make 900, means last year 800, this year they had to, so last year they have recorded only as 800 expense, but this year 900, means you have to add 100. And what is the answer? 4,050 is the income tax for the year. Why, guys? Last year provision 800, but you had to pay 900. Under provision add current 100, 4,050. Fifth one is the answer, right? Very easy, guys. In this, the answer was first one. Question number 24 and 25, guys. What is 24 and 25? Under ratios, guys. Okay, 24 and 25 ratios, right? Okay. The company sells goods keeping a profit of margin of 20% on selling price, not on cost, right? 10% bank loans obtained on 1/4/2021, and the balance remain unchanged during the year. So we haven't repaid or again obtained any bank loan mid of the year, right? Okay, or during the year. Interest cover ratio, some students memorize the equation. You all know number of times you are able to cover the interest before you pay the interest, guys. Okay, so profit before tax is 15,000. 10% bank loan is how much, guys? 10% bank loan of 150 is equal to 15,000. So profit before tax is 15,000 and 10% on 15. So that means, guys, your net profit before tax was 15,000. You already had paid interest or incurred interest 15. So before interest, what was your profit? 30,000. So you can cover two times. Some students, no, sir, we have tried net profit before tax plus interest divided by interest. Same answer. We are going with meaning. We are not memorizing. Part two, now you have to show the method and all. Here, answer is, guys, how many times? Two times. So you have two answers here. Debt to equity ratio means you're going to compare the debt and the equity, guys. So it's very simple, guys. This is 31st March 2022. This is also 31st March 2022. So they're asking, guys, okay. Very simple. What is debt to equity, guys? So debt to guys, okay, 150. Equity is equal to 200. How much, guys? Then debt is, look simple, guys. Debt is 150. Equity is equal to 200 means tunai hatarai 3/4, guys. 3/4 kila kiyanne 0.75. Answer is number 4. Return on equity ratio and inventory. Return on equity ratio means, guys, okay, for the equity, the return is the profit. This year profit, right? Okay, so what is the equity? 200,000. This year profit, guys, okay. Profit before tax 15. Tax for the year is 3 means 12,000. No, guys, okay. 12,000. So divide and see, guys, okay. Right? 15, 3. 12. Right? 0.06 percentage. Again, 0.06 6 percentage. We have question number 3 or 4 as answer. Inventory turnover ratio means number of times your stocks are converted into sales, guys. Okay. So average stock is given 20,000. So how is stocks, guys? Okay, turn to sales. You can't take sales, you take cost of sales because inventory is in cost value. Have they given cost of sales, guys? They have given sales. The clue is 20% is the profit on selling price. From this, if 20% is profit, that means 80% is cost. So cost is 160,000. Average inventory is, they have given 20,000. How many times, guys? 8 times, guys. Answer is going to be third one, guys. Look, 25 MCQs been discussed, right? 25 MCQs been discussed, right? Okay, now it is all about marginal costing here. No. A company is planning to produce 1,000 units during the next period. The following estimates have been made in this respect, right? Okay, what are they asking us? I have to आपके revision अंतिम में प्रश्न कराने के बना देंगे. Lot of papers all about technique, not just not memorizing, not only fixed cost, variable cost. We know around 6 methods how to come for the same answer, which is the total cost. Okay, right? You know what is period cost, you know what is production cost, but you know what is non-production overhead, production overhead, what is sunk cost. Okay, all those things, right? So here, look, guys, total raw material cost. This is like, guys, the following estimates to produce 1,000 raw material. What is the question? Production cost per unit 200 plus 140. Here, look, total variable production overhead. Yes, production cost. Okay, this won't come. Non-production. Fixed production would come. Fixed non-production will not come, right? Okay, right, guys. Okay, then fixed production overheads are absorbed based on production. So they're asking what is the production cost per unit, guys. Okay, so I'll see here. Total raw material cost 200. Just use calculator around 200 plus 140. You will get 340,000. 340,000. It about say if you add 60, 400,000. If you add 200, guys, 600,000. 600,000 divided by 100 is here. Someone says, sir, what is that fixed production over it's absorbed? Nah, guys, Anityavati number of units, so they haven't given machine hours. So it's very simple. 26th answer is what, guys? Clearly number 1, guys. So 27 balaganda. Material costing. Annual consumption of a type of raw material used in manufacturing business is 3,000 units. Annual demand. There's economic order quantity 2DC over H. You all remember now, guys? Okay, 2. Annual demand is given 3,000. What is C, guys? Cost per order. Have they given? Yes, 300. And look, directly given annual holding cost per unit is given 5, guys. Okay. So if you do the calculation here, guys, okay. Make a headline, guys. Okay. So 2 into 3,000 is 6,000. 6,000 multiplied by 636. So it's going to be 300 60,000, 36. Look, without calculator block, this side high bindu dekai 600 units. So 27th answer is number 4. You can simply use the calculator and find. Next, guys, it is 28 labor costing, guys. Question number 28 is labor costing. The following information has been extracted from the payroll for the month of April 2020 of a company. Basic salary given, monthly cost of living allowance given, deduction. So you all know. Question is total salary expense, including, we know even if they don't say it is including EPF, ETF. So it's the gross salary, EPF expense, and ETF expense. These three are known as what, guys? Okay. Employee related expense for the period. No? Right. So let us see question number 28, guys. Okay. Basic salary, allowance. What is meant by gross salary? Basic salary plus bonus, allowance, overtime. So these two 900. Deduction of loan insurance deduction also, guys. So I can say the basic salary, this one is 900,000. Okay. Next, what are they saying? Employer and employer contribution 8 and 12. Employer 12%, guys. Okay. The current ETF is 3%. Contribution are based on basic salary and the allowance paid to him. That means, guys, gross salary 900. So what is 12%, guys? Okay. 12% can 908. No, correct. No. And ETF 3% can 27, guys. If I add, I will have 1035. Easy. Answer is number 3, guys. Answer is number 3. Question number 29 and 30, guys. But theory prashna marginal costing theory, and 30th one is what, guys? Investment appraisal. So question number 29, which of the following statement is false in relation to CVP analysis? Total contribution is total fixed cost at the break-even point. It's equal to, yes, because why? We don't have profit. The full contribution money is used to cover the fixed cost. That's why no profit. Total profit beyond the break-even point is equal to the amount of total contribution less total fixed cost. Correct. They are asking the false statement. Both are correct. Why, guys? I have said you all know, guys, contribution after break-even point, no need to cover the fixed cost. Everything is known as profit. Okay. Right. Sales value at break-even point is calculated by dividing the total fixed cost by, yes, total fixed cost by CS ratio. You get what? Straight away BEP at rupees. That means BEP sales value. Margin of safety value can be calculated by dividing the profit by the CS ratio. Right. Margin of safety in value. Now look, guys. Okay. So, guys, you all know what is margin of safety? Margin of safety refers to the additional units which are being sold more than break-even point, if not the additional sales. So if you have the margin of safety in value, and then, guys, can be calculated, you divide the profit by sales ratio, a cut, you can get the answer. We'll see. If you all don't know about that, go for the 5th one. Sales revenue is equal to the fixed cost. Sales revenue is equal to the total fixed cost. No, guys. At break-even point, sales revenue is equal to the total cost. Why? You are covering the entire cost, including variable. Answer is number 5. 30th, which of the following statement is or are correct to the evaluation of capital investment? Accounting, I have taught you all what is meant by discounted technique, non-discounted technique, and all, guys. The accounting rate of return can be calculated by dividing the average cash flow of a project by its average investment. Wrong, no, guys. Average profit divided by average investment. A in A. So I'll take A out of the equation. B, guys, in evaluating a project based on payback, cash flows generated after the payback period are ignored. I said no matter you get millions after the payback period, we only consider how quick we can cover. B is correct. So still I can't go for an answer. This is also wrong. I had decided based on C. Positive NPV indicates the project generates a return higher than its expected rate of return. Positive NPV kila kiyanne, it generates a return than its expected rate of return. That means, guys, okay, right, rate of return ekata venama thiyena accounting rate of return. But, guys, positive NPV means, guys, okay, present value is whatever we expect is what, guys, some more than money flow ekata vada wedding apita salli hambenawa if you consider with the present value, guys. Okay, so you can stick with 5th one, B and C. B and C only. 5th one, yes. Right, so this will end up your 30 questions here, right? Okay. Right, guys, moving on to the 31 to 50, where you should write short answers here. Right. So question number 31 asks whether it's true or false, guys, related to look management accounting. So you all know then, guys, okay, here follows the internal guidelines of the firm. Some students will put up for this is not LK standard at all. Internal guidelines in the firm, guys. They have their own this one, guys. So you can say true. Provides both monetary and non-monetary information. Yes. Provides information to make managerial decisions. True. Only future is correct. Only future is wrong, guys. Why they can even say what took place yesterday or last week, correct? Okay, so answer is false there, guys. Easy petty cash. During the month, 16,000 petty cash expenses were paid by a firm, 4,000 remaining. Guys, impress means you add those to 20,000, no? From 20, no, then 16 paid and 4 remain. Journal record the reimbursement, no change of like impress or reimbursement. Who is giving the money, guys? Main cashier. Cash control account, 20,000 credit. Who is receiving the petty cash here? Petty cash control account. Not 20,000. Reimbursement, no, guys, that's the interest amount. So how much will they give, guys? 16,000. Look, guys, account in equation use karla karante. You have to say impact on equity balance, whether it is increasing or decreasing or not changing, guys, right? So if you see, guys, okay, and with the amount also, donation of a computer with a selling price of 170 at school, it cost is 150. So we are donating our selling price 175, guys. So they're asking, guys, okay, what will happen on equity balance? 175 cost of computer you have donated, no, so you can't write, sorry, 150 worth of donation. So it will decrease, equity would decrease because expense, donation is an expense. What was the donation value? You can't say the selling price, no, 150. B, guys, a photocopy machine which was used by the owner was invested in the firm. Okay. The cost of this machine was 750 and its fair value when it was invested by the firm as cost value invest karana, fair value the value they agree upon at arm's length. Two knowledgeable parties agree. So how much, guys, equity increase by capital investment amount is 500,000. Next one. Madura traders commenced the trading business on 1/3. Commence, no opening balances. All sales are done on credit basis by the firm, subject to 20% trade discount. That means from the list price you have to minus. Here they are given on list price. 1 month credit period is allowed to debtors from the date of sale. 10% cash discount is given to the debtors for the amount settled within 15 days from the date of sale. They're asking the balance of the control account and discount allowed to recognize. Okay. So let us see, guys. Okay, there was two sales here. On 10/3, there was a sale 5,000 list price. 1,875, there was another sales, guys, on 22nd date. And this is on 10. Why am I writing the date, guys? Because the discount is given if the for the amount settled. They never said full amount should be settled, for the amount settled within 15 days, right? Okay. So look at this, guys, okay? Question is closing balance of debtors and discount allowed. Now, guys, how much money is given? Look at this, 20% trade discount. Now, so let's minus the trade discount, 1,000. So basically, the debtor should give me here 4,000 for this. Here, 20% is 187. Guys, okay, how much? 370. No, is it correct? 180 375. Sorry, 375 trade discount means 1,500 debtors should give us. Agree? Next, what is happening, guys? Okay. 1 month credit period is allowed to debtors from the date of 1 month credit period is allowed to debtors from the date of sale. 10% cash discount is given if they settle. They are saying percentage settled by the debtors during March, 60%. Settle means not only money, right? Okay, it includes discount. So what is 60% of this, guys? 60% means 2,400 settled. So still the closing balance is the remaining 14%, 40%, 1,600. So in this also, guys, 40% settled. 40% settled means 40% of 1,005 is going to give me 40. 600. So 60% is going to give me 900 not settled. So which is not settled, guys? Okay. Not settled is this. Not settled is this. 1006 and this one is going to give me how much? That method it is not like, guys. It is not MCQ. So 1006 plus 900 will give you the value of 2500. Right? Okay. So question number 34 again, right? They have given 30. So 2500. Right. Next one. Discount allowed, recognize from us. Now, discount allowed, guys. This one, guys, 2004, they said out of this one, half was settled with. So, from this, guys, half is only settled, guys. Half kila kiyanne 1200. The other half they have settled on different date before after 15 days. In this was settled now. So 600 when you are settling in 15 days, you give 10% cash discount 60. That means cash you paid is 540. That means the debtor. So this 60. Here from 1200 settle, it's 12, guys. Okay. So then how much is the discount allowed? You should record, guys. Okay. Discount allowed here then 60 enema. Make it 12 hour, guys. Okay. It should be equal to not 12, 120. 120 and 60, how much? 180,000. From 1000 to 10%, 120 discount. From 600, 10%, 60 discount, 180. You all understood the 34 thoughts. Next one, guys, question number 35 is a very similar. 35, 36 in 1 minute you all can complete. Right, okay. Even 37, no conceptual framework. So, guys, creditors control account elements, you don't know this skill again, you don't know accounting, guys, okay. It's liability. Accumulated depreciation means provision for depreciation. You all know it is asset. Drawings, you all know equity. This is income. Right? So liability, asset, equity, and income, guys. Next one, they're asking what said the most appropriate concept. That means there can be more than one answer. You all know that, right? Valuation of a lower of cost. Go and check your review. How many papers we would have done? No, guys. So what is it, guys? Okay. Prudence concept is the best one, right? Classification of fabric as current and sewing machine as non-current asset, guys. Okay. Why you record something as current asset and something as non-current asset? Be everyone, guys. Okay. Because, guys, non-current asset is used for a long time period. Going concern. Depreciation in the production cost, you are matching that relevant expense. Matching. Record of sale based on the satisfaction of performance obligation and contracts. Now, guys, this SLFR is we studied, guys. SLFR is a revenue with contracts. SLFR is and simply, you know, guys. Okay, when it comes to sales, this one, it's realization concept. When it comes to standard, we did the 5 steps. What were the 5 steps? SLFR is 15, guys. Okay, identifying the contract, determining the what performance obligation, deciding the price, transaction price. Determine what, guys. Okay. Allocating the transaction price performance obligation. Next one, guys. Okay, recognizing the revenue based on whether the performance obligation is fulfilled or not. Right, very simple. Method any concepts in it, right? Question number 37. Complete the following sentence in line with the conceptual framework for financial reporting 2000. Guys, you have to just complete, guys, the following sentence. Under the present obligation of the entity to transfer an economic resource as a result of past event, guys. Okay, what is it? A present obligation of the entity. So anivaryanga uttaram kada, guys, liability. An entity that is required to prepare general purpose financial statement defined as what, guys? Okay, we call it as what? Entity reporting entity. Okay, hope there was like a network issue, right? Okay, now look at this, guys. Wrong. and Eranga carried out a partnership sharing profit and losses in the ratio of 3:2 respectively. Capitals always, I said, when it comes to partnership, you guys know the accounting here because we don't do sole trade a participant company the same way, guys. Approaches to nothing, all right. Okay, you all have 3 approaches for that. So this MCQ, so you can't waste time here. So 31 3 2022 then 1/4 2021 is the opening this one. So they're asking guys, okay, how many partners were there? 2 partners, Ranga and Eranga. 3:2. That's how I have taught your techniques how to do the sum, right? Capital balance, Ranga, Eranga, they have given guys, okay. So I'll do the working here. They have given capital balance. No need to prepare like part 2, right? Ranga and Eranga. Credit means I will add, debit means minus. Some students do that. I mean, I'm doing an MCQs. Part 2 karna game, credit dala, debit dala, waste of time, right? So Ranga and Eranga. So Ranga, how much guys? 3,000. And Eranga had. And you have to notice guys, okay, this Ranga, this is not the opening balance they are giving. This is the closing balance they are giving. Yeah, May balance am I then? So I'll write here. This is the brought down closing balancing, right? Okay. So next one, guys. Okay, Suranga was admitted as a new partner on 1/4/2020. Exactly the next day they are starting. Who is adding, guys? Okay, Suranga brought 1,500 cash for capital and 500 cash for. So altogether, guys. Okay, his share of goodwill is 500. You all understood, right? So Suranga came with a what profit or loss sharing ratio have they informed, guys? Okay, 5:3:2, guys. Okay, so Ranga 5:3:2, guys. Okay, right? So Suranga brought 500 for his goodwill means this is goodwill means you all know, guys. Okay, you all know if that is his goodwill, his share of goodwill is 500, guys. The goodwill of the partner through partners capital account from 1/4 to Ranga Suranga agreed to share the profit or losses as 5:3:2, guys. Okay, so he brought his share of goodwill as 500 guys. Okay, so if it is so, guys, okay, if it is 500 means what is 3 portions, guys? Okay, then what is 3 portions, guys? Okay, sacrification ne hetara kiye denne, guys. Okay, right? Yeah, listen, from 1/4/2022, Ranga, Eranga, and Suranga agreed to share. That is a new ratio, 5:3:2. On 1/4/2002, Ranga brought 600,000 as additional capital. So Ranga manada karega is okay, additional capital tava highest ye kuch gina. So right, the question is goodwill of the partnership, guys. Okay, so Suranga brought 1/5 cash for capital and rupees 500 cash for his share of goodwill. So he brought 1/5 as capital and 500 for goodwill. So goodwill, you all know, guys. Okay, when you're writing off means it is the new ratio, no, guys. Okay, so new ratio kida make a 2 portions are 500 means, guys, 3 portions are, one portion is 250, so this is 750. Then this is 1 portion is 250, 1,250. 1,250, 750, and 500 is 2,500 is goodwill. Some of your mind, how is it, guys? Guys, sacrificing in the new ratio, guys. So 2005. Journal entry record the goodwill. So journal entry record the goodwill. You can simply skip the goodwill account part and do the adjustments in capital account. When you are giving goodwill 2,500 give for the old partner, so he will get 1,005. He would get 1,000. Yes or no? So I'll write here. Ranga capital account credit would get 1,005. Eranga capital account 1,000. But when cancelling off their capital account, Ranga 1,250, Eranga 750, and who joined, guys? Okay, who joined? Suranga 500. So this is the double entry, guys. Easy 30. Question number 39. That is capital account balances they are asking. Okay, so look, they had this much. So how much is been added to Ranga, guys, due to goodwill? 1,005 for Eranga 1,000. Suranga guys, okay, he has invested altogether 1,005 and 500, 2,000, right? Okay, right. And then guys, okay, listen, goodwill will decrease 500 for Suranga, 750 for Ranga, and Eranga, and for Ranga guys 1,250. And also they are saying Ranga brought 600,000 additional capital. So if you calculate guys this one, for Ranga 3,000 plus 1,005 is 4,500. 4,500 plus 1,600 600 is equal to 5,100. 5,100 minus 1,250 is 3,850. So question number 39 guys, 3,850. Eranga 3,000 minus 750 is equal to 2,250, and he will have 1,500. 3850, 2250 here. 3850, 2250 and 1,500. State whether each of the following statements are true or false, guys. Okay, very simple. With related to what, guys? Accounting. Change in residual value of an item of PP is treated as changes in accounting estimate. Yes, an estimation, guys. Residual value can be estimated residual value. True. Dividends declared on ordinary shares after the reporting period, but before authorizing, are recognized as a liability at the end of. No, guys, that is proposed dividend. False. Cost of inventory should be measured using either first in, first out or weighted formula when specific identification is. Yes, guys, that is the two recommended methods, right? Present obligation of uncertain timing or amount are recognized in the financial statements as provision. That's the definition of provisions, guys. Okay, right? Even though it's not possible to estimate them reliably. Okay. So, guys, what is it? Even though it is not possible, look, present obligation of uncertain timing and amount are recognized in the financial provisions, okay. Even though it is not possible to estimate them, no. You can like possibly estimate, not reliable estimate should be there, guys. You are not exact timing amount is not 100% perfect, but there should be a reliable estimate. So true, false, true, false. This will complete 40, guys. Okay. This is LKS 10, guys. Very simple for you all. No, LKS 10. The financial statement of Damita PLC for the year ending 31st March 2022 were authorized for issue by the directors on 15/5/2022. State whether each of the following events occurred during the period from 1/4/2002 to 15/5 is an easy, guys. So we got plenty. Court order was received to pay 1/5 to settle a legal case which was filed against the company on 1/1. Just a minute. All right. So, guys, court order was received to pay 1,005 to settle a legal case which was filed against the company on 1/1. 1 year, guys. 1/1 is during the period. However, no provisions have been made. Court order was received when, guys? Okay, between that period, no, guys. So what we can do, guys? Adjust it. It was revealed that inventory had been overvalued by 200. Yeah, between that period, so you can adjust. Destruction of, I always say destruction of machine due to fire, flood, guys. Okay, and the carrying amount of 8 due to fire, non-adjusting. Capitalization of 10 million reserves, guys. Capitalization ki like bonus issue during after that bonus issue, non-adjusting. 42, guys. Question number 42. A building with an estimated value of 110 million was purchased by company on 1/4 at rupees. We bought it at 100 million, guys. We bought it at 100 million, right? Building estimated value is 110, but we bought it for us, then the cost is 100, no, guys. Okay. On this date, useful life and the residual value was estimated as 50 years and 0, guys. So 100, 0, 50 years, guys. I'll just say 2 million is the depreciation per annum, right? Company commenced using this building on 1/7. So we bought it on 1/4. 1/7 we started using, even though it was available. So you have to start depreciation from the date when it was available for use, right? Okay, now not when it is used. Fair value of the building was rupees 120 on 31st March closing. The amount at which the building measured at recognition at cost, according to LK 16, at cost 100 million. Date on which the difference should be commenced, even though you started using on 1/7, it was available from 1/4/2021. Carrying amount and net book value, the closing date. So 2 million depreciated means 98 million if you use the cost model. Revaluation model means, guys, on the last date, they are revaluing for the fair value. What is the fair value, guys? Okay, then. Last date here, you revalue for the fair value, no, guys, then 120. It's considered as a new asset on that 120 million. Question 43, guys. Okay, easy. They are talking about LKS 37. Nee, guys. Okay. Indian PLC manufactures and sells electronic equipment. State with the reason whether each of the following situations this company could lead to a provision or a contingent liability. What is provision, guys? Okay. Uncertain timing amount. Contingent liability, we can't confirm until it takes place, guys. Okay. Company has a past practice and a published policy of refunding for the defective items returned by the customer. However, there is no legal agreement in this. So there is no legal agreement. So what are the two types of obligation, guys? Okay, I have taught two types of whether it is, guys, okay, legal obligation or constructive obligation. So there is no legal but constructive. That is like they are following that normally, right? Okay. So what can you say, guys? Okay, A, contingent, you can keep no provision on warranty. Provisions. So what is the, you're going to say, guys, okay, the reason there, what obligation? They are saying with a reason. So right, say what is it? Constructive obligation. Legal nothing not a constructive obligation. Guys. Next one, guys. B. B, guys, okay. Company is currently in a dispute with the competitor firm due to infringement of patent, right? And it is expected that a substance compensation will have to be paid if a case is fixed against Indonil. So we are only Indonil PSC. So A cut punna guys current parameter we can will have to be if a case is, so case is not fixed it, right? So provision, if the case is going on, guys, okay, provision still there. So until they file a case, we can't make sure. So what is it? Contingent liability. So what are you going to say, guys? Okay, contingent liability now, Munada. We call it as not probable. Possible obligation may exist. Or you can write there, cannot confirm until it takes place. Cannot confirm until it takes place, right? So 44, guys. All right, SLFR is 15. No, SLF question number 44. SLFR is Amali PLC is a company engaged in renting of power generators. Daily rental of the power generator is 20,000 on 29/3. Recently also we discussed, no, 29/3. Company entered to a contract to rent a generator to Saman PLC for the period of 7 days. Company received 100,000 as an advance on this date. The advance includes refundable deposit 50. So this is not income. So what is the income they received? 50, but I don't know whether it is the relevant income for the period. Then they are saying, guys, okay, the company received 100 as an advance on this day. The advance includes a refundable of 50. The generator was delivered to the business premise on Samal at early morning 33. So they are asking on 31/3. Early morning 33 means 2 days. After 2 days only we are preparing accounts. So 2 days rent 20,000. 40,000 we had earned from this 50. 10,000 is unearned, guys. So rent income recognized is 40. Unearned is 10. This 50 some students might think unearned. Oh, that is non-refundable deposit. It's a liability. You can't record it as unearned revenue, guys. Okay. Question number 45 is very easy. What is the question? Ratios. The following information has been extracted from the books of trial balance of as at 31st March 2020 of a trading company. So debtors prepaid. Question is quick asset ratio means all the current asset other than what, guys? Okay, stock and prepayment. So prepaid guy. Inventory guys. So we have debtors, cash and cash equivalent, 6,000. So 6,000. And we have current liabilities, guys. So current asset divided by current liabilities. Current liabilities here, they have given 4,000. So answer is what, guys? 1 point. Okay, then 1.5 times. Debt collection period dates. You all know what is debt collection period dates is what you know. First of all, say what is debtors turnover ratio, guys. Okay, number of times we convert the credit sale into cash. So have they given credit sales, guys? Okay, all sales are credit. So 20,000 credit sales. Average debtors have they given, guys? Opening debtors 4,5, closing debtors 3,5 means 8 divided by 2. It is equal to so this is equal to 5 times, eh? So 5 times, no guys, okay, so 5 times means if you say 365 divided by 5, guys, what is the answer? Okay. 5 times is, so what is that 5, sir? Debtors turnover ratio. So 365 divided by 5, 73 days. How did I get this? 365 days divided by the debtors turnover ratio of 5. 73 days dila tiyenne 73 metana 73 1.5. 46, guys, you have to mention the source document, no? But guys, it is not related to the chapter number 3. It is related to documents we studied under like okay, costing, mainly material costing. So Balagand production division requests raw material from the stores, guys. So what is it? Material requisition note, guys. Stores request the purchase department to purchase raw material. Purchase requisition note. Purchasing department places an order to purchase, that is the indent, no, or the purchase order, right? Indent or purchase order. The stores receive. So what is it, guys? Goods received note, guys. 46. 47, simple question, guys. What are they asking, guys? Okay, whether it's direct and whether it is variable, right? You know, whether prime cost non-direct, variable means whether it changes with the level of with the activity level. Cost of fruits, guys. What are we going to produce, guys? Fruit juice bar. Cost of fruits, obviously, without that you can't produce direct. And guys, when there is more production, it increases. Cost of advertising, guys. Okay, is it direct, guys? Okay, guys. Okay, it's indirect, but it is not even production of it. It is non-production of it. That distribution expenses. Variable of fixed, guys. Okay, advertising is not based on how much you produce, no, guys. Monthly salary of the person preparing. Monthly salary of the person preparing. Yes, it is direct, but they are paying as a fixed amount, not variable amount. So fixed. Annual license fee to be paid, guys. Okay, ekenne mokadda aniwarenga indirect. I guess it is not directly important to produce, no, guys. Okay, so annual license is fixed. Next one, guys. Okay, again we are coming into a question number 48. Reorder level. I have taught you all shortcuts, not memorize shortcuts techniques. Maximum to max, maximum consumption 600 multiplied by, guys, okay, maximum lead time. So 600 multiplied by 60 and here, guys, okay, 36,000 kilos. Minimum stock level, guys, reorder level 36,000 kilos minus average into average. Average consumption 400, average lead time 40, guys. So 4 4s are 16,000. If you minus, minimum stock level will become 20,000 kilos, right? Okay, I hope you all understood that. And finally, maximum stock level means what, you know, guys? Okay, reorder level plus you have to find out the reorder quantity given 16,000 minus minimum consumption. So if the maximum is 600 and average is 400, guys, maximum is 600 and average is 400, minimum is 200. You all know, right? Maximum 600, average 400, average can be number. Minimum is 200, right? Multiply by, and then, guys, okay, average lead time 40, maximum 60 means minimum is 20 days, guys. So if you minus 4,000 from 50, 2,000, you will get, I think, 48,000. Correct. 48,000. So your answer is yes, 48,000. Question number 49. Private company manufactures a product and sells at a price of 500 per unit. The maximum production capacity is 1250. So there's a constraint, right? It is expected to operate 80% of the capacity level in the next period. The budgeted information at 80% capacity level is as follows. So, guys, direct material 100, direct labor 50, total production overheads. We don't care when you are preparing this, whether it is production or non-production. It is fixed cost divided by contribution per unit. So fixed cost 120,000. Variable cost per unit is 150. Sales at 500, guys. Okay. Right. %80% in the next period, the budget. Okay. So guys, so say me here, selling price is 150. Sorry, selling price 500 minus 150, 350. So fixed cost is equal to how much, guys? Okay, 120. 120,000 is fixed cost. Break even point in units, guys. Okay. So what is the contribution per unit, guys? Okay. 500. What is the contribution per unit? Right. So 500 minus 150, guys. You look, I only took this two now, guys. Here, there's another variable, no 50. So 50,000 variable cost. I have to find out per unit, no, but I can't divide by 1,000 to 50. Why? We are only operating at 80% of that. So 1,000 to 50. What is 80% of 1,000 to 50, guys? Okay. Okay. 80% of 1,000 to 50 multiplied by 0.8. 1,000. So another 50 I have to add, guys. So this will become 200, means this is 300. 300 means how many units? 400 units. Okay. Because, guys, when you are learning, when you are answering marginal costing question, we don't care whether it is production or non-production. We only care about whether it is what, guys? Fixed cost or whether it is been variable cost, right? Okay. Next one, guys. Margin of safety in units, guys. Okay. Margin of safety in units. What is margin of safety? Additional that you are selling. So if you know the break even and they are expected to sell how many units, guys? Okay. They expect to sell 1,000 now because I found out 1,000 how 80% of 1,000 to 50,000. So margin of safety is 600 units. Break even point if the selling price reduced by 10%. So break even point is, guys, total fixed cost divided by contribution. No. So now the contribution was selling price minus variable cost. No, guys. Selling price 500, variable cost was equal to 200. No, but if they are going to reduce the selling price by 10%, this will become 450. So contribution will become 250. So total fixed cost is going to be 120,000 divided by 250. Guys, here then this guys. How many 250s are in 120? How much is it, like 260? 120 divided by 250. 480 multiplied by 250. So 450, no? Again, 120,000 fixed cost divided by 250 is the new, is equal to 480. This is the break-even point in units. No, guys, multiply by selling price, which is 450. So I have to multiply by 450. 216,000 is the selling price. Last question, guys. Okay, in 50th one, last question. What are they asking? A company is considering what, guys? Company is considering a long-term investment project relating to the purchase of an asset. The following information were extracted from the project evaluation. Initial investment, you know what is initial investment, guys? The final chapter we did, guys, class center, right? How much that you are going to spend on the opening day, guys. Okay, right? So project lifetime is 5 years, guys. Okay, lifetime is 5 years. Payback period is given. Annual operating given. Salvage value. What is salvage value, guys? Okay, the net book value, not net book, residual value. Present value, this one is 1672. So how to find out this, guys? Okay, payback period is given 3.5. So, guys, annual operating cash flow is 400, means 3.5 years. If you are going to cover, means 400 into 3.5 is how much, guys? 1,400,000. Total net cash inflow in the year. Only the inflow they ask. Total net cash flow inflow in the FI, guys. Okay. So here, look. Salvage value 250. Annual operating net cash inflows is 400. So there is percent value. So it is only 650,000. And they're asking, guys, okay, net present value of the project, guys. So, guys, how much you're going to spend, guys? Then everyone, how much you're going to spend? 1,400,000, and they are giving you the present value 1672 kg 272,000. So 50 MCQs, guys. 22 paper. Part so you are. I hope you are benefited from this, guys. Okay, Handa. When you are doing memorize, when you are doing MCQ, my advice is don't memorize, don't do like part two. Logically understand, don't follow method, don't follow equations. Logically understand, do guys. Okay, all the best, right? Okay, I'll end up the session, right? Okay, right? Okay. Doubt tab Tibanang, any doubts, guys? I hope everyone has that. This one, I can Samara cut text in the coordinated number, guys. Okay, but I'm making that right. Okay, see you all right. Okay.